Hey, everybody. It is Chuck Barone. Friday, September the 6th, 2024. Happy day for Chuck, guys. Forget the markets, forget money, forget the world for a minute. The NFL has kicked off. Started the season last night. Win for the Chiefs again, as always. Tonight we got another game Sunday. Full slate of NFL. And my beloved Bills playing the Cardinals this week. I think we got a pretty good chance. All right, anyway, enough about NFL. I'll tell you what, forgive my casual dress today. I got my golds going today, guys. It's football focused for me. You know, I'm the craziest football guy in the world and super excited for the weekend. Anyway, let's get back to the markets now. Let's move back to focus. You guys see these markets today? Not a happy day, guys. I think the world catching on to stuff we have known, right? We've been telling you guys, soft landing. I think it was in 2022 when they started talking about that. And it was, remember, I was comparing it. So when you hear the word soft landing, picture the Hindenburg landing, right? You know, the picture of the Zeppelin exploding into flames. And it looks like, lo and behold, things might be going that way. And it's sad for the country. I think that I would certainly love to see the Federal Reserve actually pull off a soft landing sometime. I just don't think that this time is going to be the one. Anyway, let's talk about markets today. But before I get rolling, let me take a half a second and thank everybody for being here today. Welcome to the show. We got a lot of interesting stuff to talk about today. Let's get rolling. Stock markets coming to the realization they might be just a little bit overpriced. I was listening to an analysis today. They were saying that prices, they don't really want to drag down prices. What they want to do is cut the PEs on a lot of these stocks. You guys have heard me talk about that. It's kind of an old school way of thinking about the stock market, but it's old school because it worked for hundreds of freaking years, guys. This is not something that's going away, okay? A company earns $1 and a stock is selling for $20. Company B earns the same $1. Its stock is selling for $15, which is a better value. That's why people use these PE ratios. They're important, and they have been getting massively elevated into the high 30s and even beyond for some companies. Now the market looking at the rationality of those, because that's how you can basically tell when a stock is really overpriced. Normal PE is going to be between 10 and 15. Now when you're seeing 30, 35, 40 times earnings, now you know you're talking about a price that's kind of a little bit on the high side, right? All right, anyway, stock markets today, Dow Jones down 410 points, 40,345 on the Dow. The NASDAQ, not to be outdone, down 436 points, 16,690 on the NASDAQ. The S&P down 94 points, 5,408 on the S&P 500. So across the board, wipeout on stocks. And depending on how things go here, you know how it goes, guys. You guys, anybody that's a student of the history of markets knows September, October, these are the scary months, guys. These are the months that set up the big stuff, right? Right? Crash of 29 was in October, but September set the whole thing up. 2008, September. It's always, this seems to be September, October months. So let's hope we can get out of these months alive. Wouldn't that be nice? But the stock market, depending on how things go now with the Federal Reserve's actions and with the way the economy turns, consumers, jobs, there's so many variables, going to really set the tone for what kind of economy we're going to be dealing with when after the election, when we put our new president into office. The bond market today, big dealings in the stock market today. The 10-year falling just 3 basis points, 3.71% on the 10-year. The 2-year falls 10 basis points, 3.65% on the 2-year. So you guys can see the yield curve, at least between the 2 and the 10, has righted itself. Now you got the 2-year at 3.65. You got the 10-year 3.71. It's only a minuscule difference, but at least it's going the right direction again, right? So interesting doings in the bond market. As we talked about on the show yesterday, the yield curve reverting, I guess would be the word, reinverting, I don't know, reverting back to a normal looking yield curve typically signals, and a very strong signal, recession is here, typically here, not coming, because it's typically right at the beginning of, or right literally moments before the recession starts, that the yield curve rights itself. So we'll see though, because we've had a lot of, what's the right word for them, head fakes, signals that this market was going to be into a recession, and it just keeps stampeding higher and higher and higher. So we'll see now. Add this one to a long list of signals that recession is coming, and let's see if it plays itself out. The dollar today actually rallied up, surprisingly, up 13 basis points, 101.19 on the dollar index. The dollar hanging in there. I think the pressure is on the dollar to the downside. I know there's a lot of players on Wall Street shorting this dollar, anticipating it going down in the face of these rate cuts. They might have already priced that in already all the way, guys, depending on how the rate cuts go. So the dollar actually rallies up a little bit today. Gold comes down just a little bit. Gold down $18.80 today. $2,498.40 of silver. Gold breaking back underneath 2,500. I don't think that's a worrisome sign for us, guys. It's going to go right back through that. Silver falls 81 cents, $27.93. Starting to have my doubts now, guys, about silver breaking through this $30 resistance number. I really thought silver would be catching fire by now, but it has not. So I'm thinking I'm going to go maybe over the weekend if I got a little bit of time. A lot of football this weekend, sorry. I'm going to read chart silver, see what the story is, and what we can maybe expect next from silver. Because it just looks like it's having a big difficulty busting through that $30 resistance number. Oil today falls another $1.06 per barrel, $68.09 for a barrel of West Texas Intermediate. Kind of this is going exactly the way we thought it would, guys. And oil, if anything, like the dollar, like Bitcoin, the pressure is on prices to come down. Bitcoin today, totally obliterated, down $2,805, now sitting at $53,366. So it's confirmed it's going to try and test, I think, I have to get the chart out to see the exact number. Somewhere in the range of 52,000 is where 52,000, and then right below that 50,000. Those are the two big support numbers for Bitcoin. So let's see next week as it approaches those numbers if it's going to get a bounce and that support's going to hold. I was reading an interesting article about Bitcoin, and I'll talk about that a little bit later in the show, about how the crypto market kind of moving into a little bit of a fearful mode. Earlier this year, super exuberant, thought Bitcoin and other cryptos were going to the roof, right? And now the words they're using are extreme fear in cryptos. So we'll see where crypto goes, but it's not going away, that's for sure. All right. So let's talk about news you need data today. We got the jobs report. This was the big one for the day. And truthfully, guys, there was just no there. Okay, so the employers added 142,000 jobs in August. The unemployment rate falls back down a tenth of a point. Went up to 4.3. now falls back down to 4.2%. Number is weaker. They were expecting 161,000 jobs, so it missed a little bit, but still stronger than July's weak number of 114,000, which was revised down today. You know, they're doing these jobs numbers. They've been a little bit inflated. Inflated, nice word. A little bit exaggerated. I'm not exactly sure what the error has been, but they had to revise downward a shit ton of jobs, over 800,000 jobs. Embarrassingly enough, they had to revise down just last month from 114,000 jobs created to only 89,000. So that's a shock. As bad as 114 was, 89 not so great. So now the initial number for August, and I guess we have to kind of classify it that way. This is the initial number because we could anticipate revision up or down. 142, guys, not good, man. Not good. The funny thing was, who's creating these jobs? I want to kind of get a look at, see who's doing this. Okay, so check it out. The construction industry led the way with 34,000 plus jobs last month. Construction. Now, we all know what's happening with housing. We all know what's happening. I guess they're building apartments, right? And I don't know what's being constructed. Certainly not commercial real estate. That's a little scary right now. It's not residential housing. Maybe apartments? I don't know. But construction led the way, 34,000 plus. Healthcare in second place, 31,000 plus. I think healthcare is going to be an area of the economy, whether the economy is good or bad, where that job market is going to continue to grow as my generation, as the baby boomers continue to get older and older and older until we're all gone. There's going to be big demand for healthcare, long-term care, and that healthcare market is going to continue to go, 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 go. Now, the markets are starting to worry, guys, that the Fed is behind the curve now on these jobs. And the markets are urging the Fed to hurry up and act. Hurry up already. Market. Here, listen to what they're pricing in, guys. The market's still pricing in 100 basis points in cuts this year. Okay. So starting next week, I think it starts on the 17th, well, maybe 2 weeks or so from now, 11 days from now. Today is the 6th. So we're going to have three open market committee meetings between now and the end of the year. The market is betting they're going to cut rates at all three of those. It's going to be quarter, half. That's the way the market's betting it. Can you stand that, man? You really think rates tend to go down a lot slower than they go up? Just the opposite of the stock market, which tends to go down a lot faster than it goes up, right? So the market really figuring the Fed's going to get aggressive on these rate cuts. And check it out, guys. The market expects 1 year from now, the Fed funds rate to be at 3%. So they're expecting us to go in the next 12 months from 5.35% to 3%. So they see 1 point in cuts this year over the next 3 meetings. And starting in January until the end of summer next year, lopping off another 1.25 points. Now, I got to say, I doubt that. I seriously, unless the economy really craters out, and I think we very well could see the economy. I think we're going to hang in there till the election. The economy usually does. Businesses and the government are going to pull every lever at their disposal to try to keep the economy going through the election. But I think that after this election, we'll get through the holidays. Started next year, I think we're going to have some real strong economic headwinds. And the new president going to get to deal with that fun stuff. But I really got to say, you really think the Fed's going to cut 2.25 points? 2.25 points in the next 12 months, man? That's a very aggressive schedule. I have to go back and look at some history on this to see if the Fed ever actually, outside of an amazing crisis, in a regular, normal recession, has the Fed actually aggressively cut that quickly. Now, we know they really went nuts when the dot-com bubble popped in 2000 and Greenspan cut down. We know they cut super aggressively in 2008. The question is going to be, how aggressively will they cut this time around? Because unlike those other two times, 2008, 2000, or 2001, there was no inflation to worry about back in those days. But there is today. Because the number, even on the PCE, is still 2.5, so still higher than the Fed's 2% target. When you start cutting rates, guys, it's an inflationary effect. So it's not, once the rate cuts start happening, it's hard to see inflation actually going to continue to go down without a gigantic crippling recession. I keep telling you guys, we're living history here, right? Crazy ass shit, man. Crazy. But, we knew the jobs report today was going to tell the story. I think it tells us we're going to get a 1/4 point cut on the 18th when the open market committee meeting ends. So there we stand. China, guys, have you guys heard anything about this? China has a huge short position in the US dollar, meaning China is betting the US dollar is going to lose value. And I guess that's kind of smart because they're holding a whole shit ton of treasuries denominated in dollars. You might want to hedge that value, right? But what they're doing is trying to prop up their own currency by putting big pressure by selling our currency. Does that make sense? It's a market manipulation thing that China's doing. They said they have a short position in the dollar in the range of 100 billion freaking dollars, guys. Okay. So they've been in the markets, currency markets, pressuring the dollar down. So now we can kind of see this pressure, why we're seeing that we saw the dollar come from 104 to 101 so quickly. $100 billion can do a lot of damage to a currency. It's going to be fun to watch this now because now we get to cheerlead a little bit. Now we actually might have reason for even a dollar weak person like Trump to cheer for a stronger dollar, because a stronger dollar only going to hurt our friends in China, our biggest competition, right? Housing market. Things are turning. Things are turning away. Oh my. Almost 20% of listings across the country have already cut prices. Prices being cut pretty dramatically. New rules in effect for buyers, confusing the shit out of the market. Sellers now starting to get nervous because their houses are, no one's even coming to look at them. I think we might be on the cusp. We'll see how it works with rate cuts, because I think rate cuts will drive more buyers, which will hold prices steady for real estate. But as it stands right now, I think we could see house prices correct a little bit at least, given some relief, because you guys know how I feel. You've heard me complain about it a million freaking times. Without first-time home buyers, there really is no real estate market. You can't let investors, they're already at 30% of every single family home. Want to let them make it more? Want to go higher? Want investors to own everything? It's just, we need first-time home buyers in real estate. And I'm telling you guys right now, again, I'm old school, but I don't care. Real estate is the foundation of wealth. Real estate is where you really start to build net worth. Real estate is an easy place to build money for retirement because you get to live in the investment while the equity grows. So we need people to live in these houses, not just to buy them, to make money on them. And finally, guys, Bitcoin down about 30% since the March high. And it really is going to be an interesting thing about the story here because they've been talking about, remember when the halving happened back earlier this year? And the Bitcoin people were talking about every time it's happened in the past, here's what's happened to the numbers. And there was such a huge hype around it. Remember that? Well, I think that's pretty much what it was, guys. It was a big hype. And after that, a big fizzle because it's gone down since its peak around that time and hasn't really been able to break any new highs. So the rumor of what the halving would do, at least up to this point, way, way, way more relevant than what the halving itself did. Anyway, guys, that's it for the day. That's it for the week. Another week in the books, man. Holy crap, crazy one. Next week, it'll be more madness as we move closer to the election. By the way, Dave and Molly, Dave was talking on here about, why don't I do a lot of politics? Because economics and politics is certainly, they're mingling together a lot. I hate politics. But he was asking a question on here about why Harris won't do an interview. Why won't she sit down with the press? Why won't she do an interview? I'll tell you why. The only people who are clamoring for her to do an interview are the Trump supporters. They want to get her in front of the media to screw up. Democrats aren't screaming for her to do it. Independent voters aren't screaming for her to get in front of the media. Only the Trump people are, and they have a different motive. They want her to fail, right? So why on earth would she do it? If I was her campaign advisor and I was making the gains she's making in this election, what does she gain by doing it? Everything to lose, nothing to gain. Simple political calculation. Even if she nailed the interview 1,000, 1,000,000%, the Trump people would be looking for something to nitpick about it and make it a failure. We all know that's true. That's why she hasn't sat down with the press about, for her interview or for them to try to find a way to get her. Anyway, guys, that's it for the day. I'm on my way to get the library upstairs ready. We got a game tonight. We got the Packers against Philly in Brazil. Crazy. Brazil, really? And the bummer part is I got to find a way to watch it because I'm not a Peacock subscriber. So I got to see how I can get this game on my TV up there. Anyway, guys, have a great weekend, everybody. Let's get away from the madness. NFL, family, friends, relax. We'll be back on Monday to bring you guys the news you need. Peace out, everybody. Have a great weekend. Thanks.